All right, so let's move from sports to all things finance. All eyes will be on the release of new GDP statistics, estimates, a key indicator expected to shape economic sentiment and, of course, policy direction for the months ahead on Tuesday. Now, early projections from several global statistical agencies show mixed signals, with some economies anticipating stronger quarterly rebounds, while others brace for slower growth amid shifting market conditions. While the upcoming release follows recent revisions as well as updates in some countries' GDP series, prompting analysts to watch closely for any structural changes in how national output is measured locally and abroad. Investors, policymakers, households are waiting to see whether the latest figures will confirm resilience or reveal new pressures in key sectors such as manufacturing, trade and consumer spending. We unpack what to expect and what the numbers could mean for South Africa and the global economy with investment specialist and financial commentator Lunga Mahlaba. Lunga, a very good afternoon to you. Thank you so much for your time. So, getting right into it, what are the key indicators you will be watching very closely when the GDP estimates are released on Tuesday?
Perfect. Good evening to the viewers. So we'll be looking at the interest rates. We'll be looking at the rand, the strength of it. We'll also be looking at the investor sentiments. Right. So we do understand that there's geopolitical sort of pressures, which then does increase the petrol, could then increase the petrol pricing. Also, we have seen some very strong sort of movements with the gold prices. So the resources, financials, those are the sectors that we definitely are focusing on. Just to see how then the pressure could then be absorbed and the growth could then potentially be enhanced.
Yeah, and based on, the recent trends, I mean, do you expect the new figures to signal any form of stagnation, acceleration or a slowdown, in economic activity?
Basically, we did note with the reduction in the employment rate, it's still insignificant, but we do note what had happened in the previous sort of year. The growth was at 0.5, previous quarter it was 0.9 from 0.6. So the trajectory is an upward growth. And we also noted that the International Monetary Fund, including the World Bank, do or have made positive sort of outlooks with regard to the growth rate. So also with the policy sort of structure or policy posture of the government, we do note that there could then be some positive sort of growth rates, but we do caution that with the current geopolitical sort of environment, which could then hamper those positive sort of outlooks.
What then, should ordinary South Africans look out for in the data? I mean, are there specific sectors, for instance, that could signal relief or even concern?
Absolutely. So when we're looking at the resources sector, particularly the mining sort of industry, we do note that with the increase, remember gold is a safe haven. So with the increase in the gold prices, where every investor during times of volatility is moving towards a more safer commodity, there might be a very strong rally towards that, right? We do also caution or understand that there is a lot of pressure from the first world sort of countries, particularly when it comes to the trade with the tariffs. So those are all factors that we are currently monitoring as in a very strict manner to be able to then caution whatever sort of exacerbated sort of trajectory that might then happen. So there might then be growth, but not at the rate at which we had forecasted it on. So we are then saying potentially in that quarter could then be potentially 0.8% and annually above 1% growth.
Yeah, you might have touched on it a little bit, but how might, Tuesday's GDP outcome influence particularly the monetary policy decisions, in the coming months especially?
So basically, all those figures are then based on the sentiments and also the geopolitical, as we've highlighted. So as more news or more information is being received by the markets, being factored in, some of these things are factored in on the pricings. But as these movements happen on the information that is then being received, we're able to then come to some form of conclusions.
Yeah. And lastly, and very briefly, if you can, I mean, with these projections, particularly the global projections showing, strong growth in some regions and perhaps, softer performances in others, where does South Africa then fit into this broader kind of economic picture?
It's all about strategic positioning, right? So as highlighted, we have seen from the speeches from SONA, including the budget speech, where the government is actually trying to move towards. So how we as a country are positioned, that will then drive the outcomes, right? So as even the 1.1 or 1% above is still not significant to actually address the critical challenges we are experiencing as a nation, particularly when it comes to the employment rate. So as we are actually monitoring the movements, we will then be in a position to actually then understand how this will then impact communities.
All right, so I think let's leave it there for now. But thank you so much, Lunga, for unpacking all of that for us. Lunga Mahlaba is an investment specialist and financial commentator.